Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about a stock that reported earnings this past week. That stock is Draftkings, which surged after it reported earnings. So if you look at the ticker symbol is DKNG, currently priced at $28.65. 1 day performance 15.49%. Past week up 21%. Past month up 77%. Past 3 months up 63%. Past year up 192%. So it's been surging a lot. But is this growth sustainable? Let's take a look at it. Taking a look at the fundamentals, this market cap is $20 billion. P ratio is 530, which is extremely high. Dividend yield is non-existent, which means they are reinvesting all profits back into growth. So Draftkings, what they do is operate as a digital sports entertainment gaming company. So it provides online and retail sports wagerings, offerings, online daily fantasy contests, and casino games. So taking a look at the fundamentals in Yahoo Finance. Looking at the key stats, the P ratio is extremely high, and forward P ratio is not looking good either. Scrolling down a bit, even though the stock price performance is very volatile and has been increasing, I don't think that is sustainable. And trading volume was extremely high as well, and I think all of this is driven by the hype. Again, no dividend yield. In terms of profitability, it's not profitable, which is why I'm not into this stock. Profit margin is negative, as well as operating margin is also negative. In terms of management effectiveness, it's negative. All this is not looking good. Taking a look at the income statement, quarterly revenue year over year is pretty good, the 40% growth, but in terms of net income, that is not good if it's negative. Balance sheet, there's more debt than there is cash, and cash flow is negative as well. Taking a look at the details, as I mentioned, financials not looking good year over year, even though the revenue is increasing steadily from 191 million to 226 million to 323. You can see that the earnings, the blue bar, it's all trending downward. And this is not what you want when you're looking into a stock. So looking at Google News, just to see what market sentiment is. So it reported earnings last week, and it reported worse than expected in a world without sports. So because this is a sports betting company, if there's no sports, then there can't be any bets placed. So you can see that it reported loss in first quarter. And even though there may be quote unquote huge growth during these times, again, since no sports, no bets are being placed, and as you can see, it's not profitable. So I don't think this is a good stock in the short term or long term. That's all for this video. What are your thoughts on Draftkings? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.